This London session video is going to be enlisted in study folder. So in this video, I will try to cover every single information about the London session so that it will make your London session easier to trade. So welcome folks to another episode of T2SMC Trader. How are you all? I believe that everyone is cool. Don't forget to give me the thumbs up and subscribe to my channel if you are new, as I'm providing you the most valuable teaching and the information about the ICT concepts. I hope that I deserve at least that thumbs up. Let's go to the video. Over here, this is the London session of 8th August 2024. First, I would love to say about the London session. The London session is actually from 1 a.m. New York local time to 6 a.m. New York local time. Now you can say ICT, where ICT talked about that. I am not providing you everything whatever ICT told, though ICT talked about this, but I would love to tell you exactly about the London session. 2 a.m. New York local time to 5 a.m. New York local time. That is the kill zone. Okay, this is London session kill zone. In my opinion, the session start from 1 a.m. New York local time to 6 a.m. until the 6 a.m. New York local time. When you are going to push your button, obviously you are going to push your button in between the kill zone. That means from 2 to 5, but you will observe the price from around 1 a.m. New York local time to until 6 a.m. New York local time. I hope about the time the doubt will be clear by this small lecture. Now, what is you should look for in London session? Did ICT talk about this? No, ICT didn't talk about this, but I told that, and I am providing you the proof every single day. London session 95% of the time makes the liquidity. Rest 5% of the time it takes the liquidity. Now, when I'll be in the video, in that video, when I will explain today's price action, it will be clear to you. But right now, what you should take the note. You should take the note 95% of the time London is going to make the liquidity. When London will make the liquidity, you will start to look for the setup. If London take the liquidity, you are not going to look for the setup. So it is a very simple and very easy logic to understand. Okay? This is the first thing you should look for. Now I am coming here to this price action. This is the London session. So I am going to mark from 1 a.m. New York local time to 6 a.m. New York local time. So here, this is the 1 a.m. and over here, this is the 6 a.m. Let me just mark the 6 a.m. here. This is the London session. When you will look for the entry from 2 to 5, in that time frame, you will only look for the setup in between this time frame, not after 5, not before 2. So this zone, this is your kill zone, where you will start to look for the liquidity. I'm sorry, the setup. Okay, but when market will be here around 1, you will start to look about the liquidity. Is market is going to make the liquidity. Now, as you can see, market is falling around that area. Market is falling until that area. Okay, so this low, that low, and this low, they are relatively equal lows. So over here, this is relatively equal lows. At the same time, you can see that market has taken that liquidity, but this is a shallow run. So what market can do? Market can keep doing that. I mean, it can take the liquidity, but it should be the shallow run. That means we should go below that low. Okay. Now, what you should look for before that low happen? Here, you will look for every swing low, just swing low. You don't need to look for relatively equal lows or relatively equal highs. You will only look for swing high or swing low. If there is relatively equal highs or relatively equal lows, that's better. Nothing wrong with that, but you don't need that. Okay. So first, market has made this sell side liquidity, and later market went higher and it has made that liquidity. When I'll be in 1 minute chat, you will understand that this part perfect. Okay, then market started to go higher and made that relatively equal highs. Now it has taken that high, but with a shallow run. What do I mean by shallow run? Body should close below that line, and wick can go little higher, not until that area. Okay, if market the wick come here, then obviously you are not looking this high and that high as a shallow run. Just a little above the previous swing high or relatively equal highs, that is the shallow run, which is the obvious liquidity. Okay, so this is the buy side liquidity that market has made when inside the London session from 1 a.m. to 5 a.m. Are you going to take the sell or buy outside of the kill zone? Absolutely not. So you will start to look for your entry from 2 a.m. New York local time only. Okay. Now, when market has made, you have seen that first market has made this sell side liquidity. What should you look for? You should look for the buy. When market has made that buy side liquidity, you should look for the sell. Now, it has taken this low. You can see it has taken this low, has been taken over here. What it can do, it doesn't need to take that low. It can come very near to that low, and then it can make the relatively equal lows over there as well. So you don't need to think that it has to take that low with a shallow. No, it doesn't need to do that. It can just fail to take that low, and it can make relatively equal lows over there. It can fail to take that high, and it can make the relatively equal highs over there as well. Okay, so all you need to see, did market make the liquidity or not? If you are with me in my uh, channel for so long, you know I have just three type of liquidity. That is, one is relatively equal highs, one is the strongest liquidity, and one is the obvious liquidity. So over here today we got the obvious liquidity. Sometimes we will get the strongest liquidity, and sometimes we will get the relatively equal highs or relatively equal lows. So any of these three liquidity is applicable for trading this London session. When market will make this buy side liquidity or the sell side liquidity, when it is inside the session, are you going to look for the buy or sell? No, you are not going to do that. Instead, you will see when it has made that relatively equal lows or relatively equal highs, do you have any kind of higher time frame point of interest or not? What do I mean by that? What is the higher time frame? My higher time frame is 15-minute chart. So I will only look for that 15-minute chart. Is there any fair value gap that has been traded over here? Or is there any order block that is valid order block that has traded over there? Maybe there can be a breaker block. If you are confused about order block and breaker block, then you will only look for the fair value gap. So I'm going to mark the fair value gap as it has traded that fair value gap over here. So this is the fair value gap which has been traded. It has made that relatively equal lows, and it has traded that higher time frame point of interest. Same thing happened over there. It has made the relatively equal highs over there. At the same time, it has traded that fair value gap from 15-minute chart. At the same time, you have this nude opening gap as well. So if you don't have anything in those levels after making buy side liquidity or the sell side liquidity, oh, by the way, it doesn't need to make both buy side and sell side liquidity in London session. If it makes, it's cool. If it doesn't make, just make the sell side liquidity, then it keep going higher, and it can happen as well. But if it makes both sell side liquidity, you will, and buy side liquidity, when it will make the sell side liquidity, you will look for buy. When it has made the buy side liquidity, you will look for sell. Simple logic. Okay. So when you will have, I mean, if you don't have this fair value gap, instead of this fair value gap or order block or breaker block, if you have the nude opening gap, new week opening gap, that is also your higher time frame. That is, in addition, I have just added over there. Okay. Now I'm going to 1 minute chart. Just remember, this is the 15-minute bullish fair value gap, and this line is the relatively equal lows line. This is the 15-minute bearish fair value gap, and this line is the relatively equal highs line. Okay. That means the obvious liquidity as well. Now I'm going to 1 minute chart. When market came here and made this liquidity relatively equal lows around that area and traded that bullish fair value gap from 15-minute chart, what should you look for? You should look for a buy setup. What do I mean by that? That market has taken some kind of sell side liquidity. It has given you the market structure shift. There is a fair value gap which has been traded immediately. That means immediate reaction. And then you will look for some kind of 1 minute buy side liquidity or 1 minute last fair value gap, whatever your target is. Actually, you take. Okay. In London session, most of the time you have to think that you are not going to catch 100 handles, 200 handles, 50 handles, 60 handles. No, not like that. If you can get just 15 to 20 handle, just 15 to 20 handle, you should be happy in London session. Okay. Again, if you get just 15 handle to 20 handle, just 15 to 20 handle, you should be happy. So you please don't focus on huge move in the morning. I mean, in the London session. London session is low volatile area, though we are seeing the volatility right now. But most of the time it's not volatile around the London session. Okay, so always make sure that your target is not huge. Now, when you are in here in your 1 minute chart, though market has made that relatively equal lows and traded that bullish fair value gap from 15-minute chart, you have to first look, is that inside the London session or not? London kill zone or not? So this is the 2 a.m. New York local time. I am going to mark the 2 a.m. now. So here This is the 2 a.m. New York local time, and the kill zone is going to close around 5. So here, this is the 5 a.m. New York local time. Okay, so this is your kill zone. All your entry should be created or should be pushed inside these two line, 2 to 5. This is the kill zone. You can't push your button over here, just 159. No, after 5, yeah, after 5 you can use at least after, I mean, maybe until 510, the macro, that is 450 to 510 macro, you can push a button in that time, because actually after 5 sometimes market keep making this, I mean, setup until 5:30. But you should, at your beginning you can be strict with 2 to 5, so no entry after 5, no entry before 2. You can see this is the candle which is inside the kill zone. Market went lower. Take that 1 minute liquidity. So the 1 minute liquidity has been taken over there. This is the liquidity taken from 1 minute chart. After taking the liquidity, all I need to see that if there is a market structure shift or not. I'm going to remove this line because it's distracting. So you know that we are inside the London kill zone. This is the London kill zone. Okay. So let me change the color and make it green actually. So this is the London kill zone. After taking this liquidity, all you need to see that if there is any market structure shift or not. Now, where is my swing high which is valid for shifting market structure? This is the swing high which is valid for shifting market structure. Is that? No one. This is not the swing high which is valid for shifting market structure. In my opinion, this is the only swing high which is valid for shifting market structure. Actually, I got the market structure shift over there. Around that area, I got the market structure shift. So this candle has shifted. This is the market structure shift candle. You will start to look for your breakaway gap. Where is your breakaway gap? This is the gap which is at the level of the liquidity. So in my YouTube channel, I have already explained why you should not look for that fair value gap, why that fair value gap is not important. So that is another matter. I'm not going to talk about that. So in my opinion, this is not a fair value gap that I should be bothered. Instead of that fair value gap, I would love to mark this fair value gap, which is my breakaway gap. So here, this is my breakaway gap. Where is my entry fair value gap? Is there any other fair value gap that is going to be my entry fair value gap? Look at this fair value gap. You don't have any other fair value gap, so you have only this fair value gap over there. That is actually your entry fair value gap. Now, after getting that market structure shift, if you get an entry fair value gap over here, then obviously you will look for that entry and I mean that fair value gap. As I don't have any other fair value gap, instead of this one, I would love to say that I have to take the entry over there. So to that specific fair value gap, when it came here, obviously it has to come over there immediately. That means within 3 candle, and I have to cover this breakaway gap. Now, as you can see, it is 36 handle. I really don't appreciate this huge stop loss. I really don't appreciate it, and that's why maybe I won't take that entry. Okay, but I'm just showing you the logic. If you think that you are using some kind of micro contract, and for you 36 handle is not huge, as I'm using mini contract, so for me 36 handle is huge. I'm not able to catch that one. And over here, this is the last fair value gap. You can see there is your last fair value gap to that specific leg. You can target that last fair value gap. There is some kind of relatively equal highs, so above that relatively equal highs, this is the last fair value gap. Or all you can do is you can take a partial over there, and then you can actually hold your trade until the new day opening gap low. This is also logical if you want to do that. Okay, it's up to you the way you would love to trade around that area. But either way, I am not going to take that entry. I'm just showing you how you should trade the London session. Why London session is too difficult to trade, man? It's too easy to trade. Then market came here, it went higher. Okay, now from 15-minute chart, remember that line, that specific line, market has made the buy side liquidity around that area. This is that buy side liquidity, and this is that 15-minute bearish fair value gap. Okay, so finally market came here, and I mean, it has taken all of this buy side liquidity from 1 minute chart. From 1 minute chart, it has taken all of this buy side liquidity. What else it has done? It has traded this new opening gap. It has traded this 15-minute bearish fair value gap. At the same time, it has traded this fair value gap from 1 minute chart. That is the last fair value gap from 1 minute chart. Now over here, I have the entry fair value gap and the last fair value gap. You can just mark all of them. What if you want more precision over there? Then when it has taken all of the liquidity, what should I look for? Lower market structure shift. Now, where is my lower market structure shift, brother? You can see there is a low, this low. Okay, this low has been shifted over there. This one, it has been shifted over there. for the first time. Okay, let me actually go from the beginning. You can see this is a low which has been shifted over there, right? This is a low which has been shifted over there. Is that market structure shift? No, this swing low is not valid for shifting market structure. So I'm just gonna keep it over there, but I'm just telling this is not a perfect market structure shift. Then I have this low which has been shifted over here with some kind of displacement and also the fair value gap. Is that valid? No, it's not valid. This swing low is not valid for shifting market structure. Which swing low should I look for shifting market structure, or which swing high should I look for shifting market structure? Please watch this video. It will clear all of your doubt. Okay, just watch this video. Now, this is not a valid market structure shift. Then market has been shifted over there. So let me mark this one around that area. This is also a market structure shift. Is that valid? No, it's not valid as well. Now, you can force the market to give you this one as your valid market structure shift. I'm not agree because market has already built a lot of liquidity around that area from 1 minute chart. It has made a lot of liquidity around that. So in my opinion, it's not the market structure shift. The way it is going, this low went to that low. This low went below that low. This low went below that low. So I'm not going to mark this is my market structure shift. So I was waiting to see if market can go higher and take some kind of liquidity. So finally market came here around that area and it has taken all of this buy side liquidity, also traded that 50-minute bearish fair value gap, at the same time new day opening gap low, and then finally I got the lower market structure shift with a displacement. So in my opinion, this was a displacement or the lower market structure shift. Now you guys can say this is the hindsight guide. Please go to my Twitter, or yeah, just go to my Twitter and actually let me show you, because when later some of you will join to me, you won't be able to find this tweet because it maybe after 1 year you come to this video and you won't be able to see it. Okay, so look over here. This is my tweet. I have tweeted, go to your 50-minute chart and remind yourself about the London session precision. I keep telling what I keep telling. 95% of the time market makes the liquidity. The way I explained this one from 15-minute chart, it has made that buy side liquidity. Okay, so that's the thing. And then focus to this price action. So to that specific price action, I just take a screenshot. When I saw that displacement, I take a screenshot and I just tweeted it. And then I actually outlined the trade with this thing. I was outside, that's why I used my phone. Okay, so that was the tweet I have tweeted before. So it's not hindsight. This is my market structure shift which I have got over there, a perfect market structure shift. Then after getting the market structure shift, where is your fair value gap? There is your fair value gap. Where is your breakaway gap? No brother, I don't have any breakaway gap over there. Now, right now, ICT is providing 2024 mentorship, which I am also covering by the wizard version. Over there, we have learned about the inversion fair value gap. The high which has taken the liquidity, this is my inversion fair value gap. I'm just not going to explain the inversion fair value gap over here. If you are interested to understand about the inversion fair value gap, then please watch this video. Okay, this video, at the end of this video, I have explained the inversion fair value gap perfectly. Okay, I mean not explained, I have just shown you the inversion fair value gap with explanation. So please, you can watch this inversion fair value gap video. So here, this is my inversion fair value gap. Okay, so market went higher, then market went lower, gave me the market structure shift, fair value gap, immediate reaction, 1, 2, 3. Number 3 candle has traded that fair value gap. After getting that fair value gap traded, it went higher. How far it went? Until that inversion fair value gap. Now what you are going to do, you are going to take an entry over there. Your stop loss is going to cover that inversion fair value gap. At the same time, the new day opening gap low. Okay, so you just put your stop loss little higher, and then you can focus on this last fair value gap. Now, so where is your last fair value gap? There. Now you are going to see this is your last fair value gap. Don't get confused about why previously I didn't use this last fair value gap and now I am using this last fair value gap. Okay, just don't get confused, because that is another matter, and you can actually watch those videos to get clear why this fair value gap is not important when I was looking for setup, and why this is important when I'm outside. I mean, when I'm actually looking for target. Okay, so you can target until this last fair value gap. If you are overzealous, obviously you can go for that low or maybe little lower, wherever you want. You can just go for that. Okay, so that is the London session trade. Now, is that hard, brother? In my opinion, this is the easiest way to trade the London session. Just you have to think that 95% of the time market is going to make the liquidity from 15-minute chart, not from 1-minute chart. Obviously from 15-minute chart. After making that liquidity, then if you see there is a higher time frame point of interest, that should be from 15-minute chart, or maybe there will be any kind of new day opening gap or new week opening gap. If anything you have from your higher time frame, you will start to look for the liquidity taken market structure shift from 1-minute chart. If it is inside the kill zone, that means from 2 a.m. New York local time to 5 a.m. New York local time. If it is inside that kill zone, you will start to look for this type of setup or that type of setup. Okay, so it is not a perfect explanation, or sorry, example of the bull setup, but if there was an opportunity to take the entry, obviously I would go for that. For example, if this candle could go a little higher and give me the market structure shift by that candle, I will be able to take my entry from that specific candle. That would be the best example for the buy setup. But as it is, whatever it is over there, I just can't change it. Sometimes market actually wild. Okay, so it was wild over there. Why it was wild, I can explain that as well, but it will be a big, I mean, longest video, so I'm not gonna go inside that price action. Instead, I would love to tell that. So here, this was the perfect setup. You just cover the entry or whatever you want, just cover it, and don't think this is the hindsight. I have already explained I mean, I just outlined that trade in my Twitter in live. So I hope that, guys, this video is little insightful for you to clear your doubt about the London session. This is the easiest way to trade the London session. Trust me, man. Don't believe me. If you don't want to believe me, no worries. Just go to your chart and look every single London session, what it is doing. And this is how you will build your confidence. And later you will just come back to me. I know that you will come back to me and you will thank me for this most crucial information. So until the next video, guys, cheers.